Morning. How are you today? Gorgeous Friday. Good morning. Good morning. How was your week, Catherine? It happens. Especially when cycles are switching on the higher time frames. I think I've been repeating that all week long, but the volatility seems to be getting back in track. So next week, I believe, should be better, much better, if you ask me. Who knows? Let's see. Well, if the 3 time frames are not lining up anymore, one small suggestion on my side is to probably go ahead and protect the trade if already in profit. If you're suffering some loss, you can go ahead and look for exit plans, or just cut it if you're in small loss, small sell, small buy. I mean, profit or loss. There are many ways to do it. You just gotta understand that you must have a plan. And if the plan is not there anymore, like what was the example this week? Aussie CAD, I believe. Aussie CAD, yeah, where we were looking to go ahead and short it, okay? And we got the breakout of, was it this trend line or the big one? Doesn't really matter. Okay, we got the breakout and we just got stuck here in this thing, okay, the pattern, which suggested that we might be going and visiting this line. So cut it or lower the exposure. If you have one lot, for example, cut it to 0.5 lots or 0.3. All right, guys, so let's go ahead and cover the charts. Overall, I would say good trading week. Majority of the softwares also managed to provide the strategies, I mean, also managed to provide some good results. And that's understandable because after the quiet periods, the moves start to happen, which means depending on the actual software, of course, we are going to get moves, and those moves are providing good trading opportunities. But I'll cover the strategies as we go with the charts and not cover them all because it really takes a lot of time. But you know, the Friday sessions, since some time we're doing it a bit different, we go ahead and cover everything we did during the live trading rooms and basically see what summarize of the live rooms during the week. That's all. Master Yordan, good morning, Peter. Glad to see you. Yeah, just for me, that's the most important thing. If the plan didn't change, okay, for example, let's say, just one moment to open the pan. Let's say you're attacking, I don't know, a sell here for some reason, okay? You got your reasons, you go ahead and attack the sell, boom. It goes higher, or this one, let's say you're attacking the divergences. You find yourself a level or so, you attack it, your target not reached, it continues higher. Once it continued higher, this move, does it make sense for the divergences again? Yes, it does. If you go ahead and put your levels, it will still make sense, right? It would actually make more sense because now this is 61.8 and here you only had, let's say, I don't know. Well, we don't really have a level beside the swing, but for the sake of the example, I think you got me. So attacking sells again makes a lot of sense because nothing really changed on the contrary, you actually have more levels now supporting yourselves and the bounces that you're expecting. Okay. Anyway, guys, let's move on to the chart. Ivan, this is Yordan, not Vladimir. Nice meeting you. Vladimir usually holds the US sessions, okay? I'm holding the morning sessions of the Europe time. So back to euro dollar. First thing, during the week we said that we're looking for this thing to either bounce and go ahead and reach the next level, which was approximately there, or we're looking for breakouts below this tiny range, which is better seen on the 1 hour chart, of course, together with the trend line that should be providing some sort of a continuation lower. And looking back at the bigger picture, let's not forget where it all started. We have triple formation on the daily chart coming with double wave. This double wave did provide a divergence, and the trend line of this double wave, let me just draw it here, is now also broken, right? So we had the second leg breakout, which is the first confirmation, a bit aggressive, but as it comes with the lows of the 4 hour chart, in my opinion, is absolutely tradable. Besides that, the target of this daily cycle was also reached, 38 to 50 zone, and we bounced exactly from the 38, this magnet level right here. So all reasons for a sell are in place. We even had the 4 hour chart one leg divergence, which could be seen on the 1 hour chart as well. And we said that acceptable sells from this point. This trade is currently moving fantastic. I do expect to see pullback. So if you did not join for some reason, any pullback, in my opinion, during the upcoming week should be again an opportunity for us to go ahead and trade it, those sells. Now, in the bigger run and the longer picture, assuming that this is wave number one, okay, so this triple or special cycle is now one complete big wave with pullbacks, assuming that this pullback is completed, of course, we can go ahead and measure this cycle right here, which means 110 should be reached, okay, as the next target based on the cycles. Of course, during that move down that we can expect now, as long as this high is holding, of course, we do have plenty of strong levels on the way, okay, and all these zones, once the price manages to form divergences against, we can expect pullbacks, which means cash out, corrections, sell again, cash out, corrections, sell again. So this way, once the higher time frame gives you the idea of where the market should be moving, overall picture, the bigger view, you can drop to the lower time frames and enjoy the swings with shorter term trades. If you're a longer term trader, that's also fine, because then you can just sell and stick to this final target and simply enjoy it. Okay. There you go, another confirmation. Peter is saying euro dollar 38. Fibonacci is also the target from the ascending pennant. So you can see, guys, that the more you know, the more knowledge you put in your toolbox, then once you apply all that knowledge to the same chart, when things do match, it's extremely, extremely reliable. Okay, because we've been talking about that many times. If you're a divergence trader and you see divergence right here, then if you're a Fibonacci trader, you can go ahead and put here some kind of levels that once matching your zone, you have another confirmation. Then you have resistance, support, monthly pivots. Then you have all kinds of confirmations that you can go ahead and figure out. And once all comes together, that means robots, traders should be triggering this move down or up. And I'm not referring, to be honest, to the retail traders, because we are just a drop in an ocean. We don't move the market. But keep in mind, the big guys, they also must have some sort of strategy when trading, right? So assuming that one of the strategies we're using, or one of the methods, they should be using them as well. Okay, it can be that complicated. Of course, I'm not talking about the flash boys and all different kinds of high frequency trading. I'm talking about different robots on the higher time frames, because with high frequency trading, I don't think anyone can compete besides other robots. So moving on, that's about euro dollar. Very, very nice opportunity. Then we go to cable. And the whole idea here started with, first of all, this level, then the rejection of the next levels that we were expecting to see. That never happened. Instead, we got the push lower, created this sort of convergence. Basically, very strong momentum move to the downside with a beautiful double wave. And we said that we can expect the price after breakout here to go ahead and provide us with this bearish continuation. That did happen. Previous low is now reached. Okay. And if you're already in a sell, in my opinion, you should be at least moving the stop loss to break even and protecting. And furthermore, I would say that it is a good place to go ahead and cash out at least target one here. I think we're going to move lower. I think we're going to reach at least that zone, maybe even this zone. But once we get stuck, not stuck, once we get inside bullish divergence zones, we should be careful, and the least we should do is go ahead and protect the capital. I'm going to draw here the Fibos. I just need a different level. What could that be? Orange. Let's see. And you'll see where all comes from, right? 61.8 currently reached. It is below the previous swing. And I think I mentioned that in a few months or weeks, once the 61.8 is below the actual swing, we can expect the price to go ahead and reach the 100%. Okay, so trend line is here, supports are here. I do believe we're going to continue lower. On the 1 hour chart, things start to develop beautifully as well. This is the same 4 hour chart potential divergence that we can see. Well, it's almost a divergence now. I would say that this is a double bottom already. We are missing 5, 6 pips, 7 pips or so. But on the shorter time frames, one more push, corrections, and then one more drop lower, in my opinion, is something that we can expect. So cable, more or less, we are looking for sales and continuation of the sales after pullbacks now. Well done for this one. Euro, franc, also very nice opportunity. Why? Because we had multiple attempts here for the buys. Well, first of all, since the previous weeks, that was the first idea. Then we got breakout, okay, of this magnet zone. After the magnet zone was broken, we said that we can attack here short term on the 15-minute chart buys, okay, as one of the options. The other option was this or breakouts. Then we had another spike lower which managed to hold the price above this magnet zone, and we finally reached the 100. And we've been repeating that this is the double cycle we're following, and that's the actual target of the daily cycle before that. This is the bigger cycle. And then we said that this level is very likely to provide bounces. Okay, as the divergence developed here, it became clear that there is a good chance, of course, for even continuation lower. But before that, we need to see at least breakout below this low. And if you want to be more aggressive, you can go ahead and trade trend line breakouts here. So divergence, fantastic opportunity here for divergence traders, by the way. In my opinion, this is a superb setup. Why? Because you have daily trend line, you have Fibonacci zone, you have the divergence, and you have a beautiful bearish candle pattern that bounced exactly from there. If you don't like the risk reward, you can always go ahead and look for the 50%. This is, by the way, something I do very often. If the candle that provides the actual bearish pattern and the completion of the divergence is too big, no problems. Go ahead and look for pullbacks. And usually the pullback for me is around the 50% of the entire candle. So if this is 40 pips, you go ahead and set your order at around 20 pips. In that case, you also have these spikes here that more or less should be ideal for the price to give some sort of correction, right? So overall, the Euro Franc provided this bullish continuation. I hope that you enjoyed it. From that moment, I believe that once we get confirmations for reversals, and for me that confirmation would come below this low, okay, the trend line breakout, I would trade only with double confirmations here because the daily cycle is still above, but it did pay. So really good opportunity. I do see a few comments. 1 second. So Yordan, would you wait for that bullish divergence to potentially play out and then re-engage short on trend line break on 1 hour chart? I just answered. Okay, perfect. So let's see if we have anything. Euro Franc, I think we had a trade here. Euro Franc triple B. Let's check it out. Euro Franc. Here we go. So that's where the software comes in play. This is the 15-minute chart, guys. Euro Franc together with the 4-hour chart. 4-hour chart slope is up, looks great. And triple B again is one of the best softwares. Why? Because when you have more than enough room from the 4-hour chart, okay, those levels are created basically on this line. This is the 4-hour chart 20 MA, and those are the levels and the zone that is being created for you automatically. And we said that we can expect this, or we can expect breakout and continuation. In this case, even if the price moves lower, as we already had false breaks and the price started contracting here, and it has all the reasons to continue higher already, even if you attack and the price pushes lower for deeper, bigger wave, you're still fine. And that's the beauty of it, because your stop loss is only here. Okay, so perfect fit of triple B for this kind of situations, if you ask me. And then boom, we got the move up. Then we have, what do we have? Let's go back to that one. Dollar cut. My idea here again was that we're going to see most likely one more push lower, or alternatively break above this high and then looking for the buys. The idea is simple. Why this high? Because this is where the last divergence happened, and as we broke above, we did create here this bullish convergence. The momentum is in place. Okay, we managed to create RSI above 75, and now we're getting the pullbacks. In other words, what we're looking for is pullbacks, and once those pullbacks are completed, we can look for bullish continuation. So how do we prepare a setup, tradable setup? Easy. First of all, you have breakout, which was never tested. That means as the price is developing lower, you can follow up on this broken trend line for this breakout zone to appear, right, to be reached. Then I would go ahead and look for simple support and resistance levels. And how do I do that? I look at trend moves where the price stopped. So let's say this is a move down and the price stopped exactly here. So what I'm going to do is go ahead and mark this zone immediately. Then when I look left and right, it must make sense. Does it make sense? Yes, it does. I have multiple times the price reaching that zone for some reason, stopping, and then continuing. Whether up or down doesn't really matter. What matters here is the idea that this is where we want to see the price bouncing from, right? The second thing I'll be following is, of course, hidden divergence to appear. That would mean the indicator to create lower lows based on the previous histogram slope here. Okay, so all that put together with possible double waves, and we can already start looking for sell setups. Now on the lower time frames, you're already going to see that we have a trend line as well, which is perfect. 1 hour chart is providing hidden divergence that is turning into continuing divergence. That means the pullbacks on the 4 hour chart might not be that deep. Of course, this is just a possible first move up, and when we have the first initial move changing the direction, changing the course and the trend, first pullbacks are not that deep. They're most of the time shallows, which means dropping to the lower time frames also makes sense. 1 hour chart, trend line, something like a double wave, which I don't love because of the 2 candles rule here, but we're going to check on the 15-minute chart whether we have better ideas there, and together with the divergence, it starts to make a lot of sense. So dropping down to 15, what do we see? That's the first wave. Second wave starts to develop. Divergence is already in play. 61.8 is already in play, and that means to be a bit more conservative, wait for the most recent significant high to be broken and then attack. If you want to be more aggressive, you can start looking for trend lines that you like, and currently I don't think we have a very good trend line even on the 15-minute chart, to be honest. So when that's not available, just go ahead and use the highs. Keep in mind this is still the first level. We have the trend line and the 100%, which means getting this would be even better. Maybe then we can get a trend line and then go ahead and attack it. So dollar cut makes a lot of sense now after we created this thing for possible continuation to the upside. We will have one trade which was on the Delta software, excuse me guys, and that was a sell trade. This sell trade was based on my expectation that from this zone we're going to get one more push lower. Basically the idea here guys for me was this, okay? If you keep wondering why I'm looking for that, basically special cycle to go ahead and complete another false break here. Okay, so that did not happen, but again, if you pick the levels right, and that's why I keep on repeating that levels are really important. You have the trend line breakout, you have the hidden divergence, okay, and you have the previous resistance zone right here. So even though that I was wrong for this move to the downside, the big one, that bounce lower is at least giving you some pips, okay? It returned immediately, but I did manage to catch a few pips and get out of the water dry with some money in the pocket. Okay, so levels, 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 because then the price is bouncing. If you have, of course, divergences and extra confirmations, and then it really makes sense because at least your first target should be reached, or you can move the stop loss to break even and at least not lose money if you're not going to win money. Yordan, when setups are forming on Friday, would you tend to wait until Sunday to initiate the trades so you don't hold over the weekend? Yes and no. If I have 4-hour chart trade, for example, that sometimes takes days or weeks, of course I'm going to hold it. There is no other way, or daily chart. If I'm holding 15-minute trade, it really depends on the situation, but majority of the times I would be holding it, yes. In my experience, at least in Forex, it's very, 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 very rare that something crazy happens and it ruins the party completely. Because even if you're going to lose and you have gap against you, it's most of the times not that serious and not that bad. But again, that's a preference and it really depends. If I'm already in profits, I can go ahead and cash out. Okay, it really depends on the situation. If I'm in the middle of the stop loss, so let's say I sold here and the price is here and it's Friday, well, I'm going to keep it. So it really depends, I mean, strictly by the situation. Peter says, weekend, I have observed sub 4-hour needs to be closed Friday most of the time. Not sure what that means, Peter, sorry. Keep in mind you're talking to Eastern European. Okay, so that's about the overcut. 1-hour chart or less. Yeah, I would agree here, but still, it depends. If I'm in profits, and that of course depends on your broker, guys. You must check with your brokers if there are gaps against you, if they guarantee the stops or not. So let's say again, I'm in a sell. Okay, imagine this is the 15-minute chart. I'm in a sell, price moved lower, and now it's time to close the market. So you have a huge gap, price opens here on Sunday evening, and your stop loss was here. So does your broker guarantee to initiate the stop loss here, or they will cut it here? Because then you're going to lose, let's say, twice as much the money, right? This is also an important factor. And if this is not guaranteed, then it's probably better to cut, yeah. Okay, moving on, Aussie Franc. This one failed, the idea for the sales, and basically it all starts from daily chart where we said we're looking for the sales. That was the first double wave on the lower time frames that we started following, and we said that we're looking for possible continuation lower. That possible continuation lower the idea came from the fact that we created the double wave, 61.8 was reached, and this is where the divergence was completed together with breakout of the trend line. So on the lower time frames, we also got, so this is the spike, breaks below the lows, etc., and then the price just pushed higher. So this one did fail, okay, and the idea now goes to, actually that is the correct one, you just need to remove a few lines and make it ready for Monday. So the idea now, guys, would be for the bigger double wave to be completed. We have the 100, we have the 161.8. If, however, we're going to continue higher, even though that there is still potential hidden divergence which is forming, and the high is right here, there is a good chance we're going to see the price reaching slightly above 100 at least. Okay, why? Because this is an important level, and depending on, of course, how it's going to develop, but giving it some angle, that will also go ahead and reach the trend line, approximately, right? So we're now starting to follow the pair for at least the 100%, and then maybe even going here. That's all about Aussie franc, to be honest. And if you don't have any questions, then we can move on to the next one. CAD franc. Let's go to the daily and then make our way down to the lower time frames. The bigger pattern, we said after this bounce, we're expecting the 100% to be reached, which is around the top of the trend line, should be around the top of the trend line, okay? And we have a great resistance zone here. Yesterday, I believe we said that these false breaks of the not dotted, dash trend line are suggesting a possible range formation, and the bounces, as we're looking at least in the short term for the push-up, could be used as buy opportunities. So we said on the lower time frames, we didn't really have anything before that, and any pullback here that you can find could be used as opportunity for a buy. If you did find anything, I'm glad for you. Now we got the breakout above this high, which means we're probably going towards these levels that we just mentioned, and that's the 0.7530 or so. What else can we say here? That possible divergence is now being formed, okay? And let's see where this thing might be stopping, and then we can start looking for the sales. Of course, a breakout would mean we're going most likely higher. So that's about CAD franc, guys. Bullish since here, expecting this range to hold the price and then continuation lower. By the way, keep in mind the hidden divergence we were referring to from this high is still there. Okay, we got the spikes down and now continuation, but the hidden divergence remains. Aussie dollar, tricky pair. We started with the idea for sales from this top. That is the top of the daily range here, together with the hidden divergence. And 4-hour chart divergence, which also completed a double wave. Okay, and this double wave, we said that we are expecting it to push lower. Now, what would happen after this push lower? We said that we have two options: break above and continuation to 161.8 to create a triple cycle, or break below these levels and possible continuation lower for the bottom of the channel to be reached. Of course, we have the previous levels before that. Now we got the spike above, which in my opinion is not what, well, at least I'm not looking for that when it comes to breakout. So this is definitely not tradable for me in terms of buys. Okay, first of all, it's a spike. Second of all, I believe it was based on the news. Third of all, you have divergence against you. So the break below here was a very, very interesting suggestion. And we now have something that I think we need to mention as well, a possible double wave. So ignoring the spike here for a second, break above these zones, that level specifically, that's the 0.7240, 0.7240, I need glasses, guys, is going to make me think we might be continuing higher, because then we have 1-2 double wave continuation. Divergence is in place, we have everything in place, and as much as I wanted to go lower, I have science against me. So keep that in mind if you're in a sell, that these levels are critical for the pair to hold and then to continue lower. Questions? That's one of the ones I got. I think I got in my short too early. Peter, thank you. Will do once we meet in the club meeting. Catherine, where was your short? If you don't mind sharing a level. the breakouts or at the bottom of your top channel here or here before the big wick? Yeah, I gotcha. Well, why? I mean, this is only where the trend line was broken, right? And this is where we got the bottom formed. No worries, you'll get there. But patience, it does pay off, trust me. Okay, so let me see if we have anything here. Not really. Okay, next one, Dolar Franc. Wow, look at it, beautifulness. Dolar Franc, guys, we are following this cycle. Sorry, not like this. This cycle, okay, and we said that we have the divergence, the completion, the false breaks, and we're looking for continuation higher. For me, the idea here was, first of all, to see the break above this trend line. Second of all, as this is the last divergence, no, it's not. Do we have divergence here? This one, no. No, we don't. Again, it is a swing high without divergence, which makes it aggressive. The only divergence is here. So that's the conservative. So yeah, sorry, my bad. This is the aggressive high. Okay, this one. Why aggressive? Because we want to have divergence before the convergence. And when you don't have it, it makes it aggressive. The convergence idea is this one, right? So divergence, breakout of the highs in between, and now that becomes a more conservative idea. Anyway, we got the breakout of the trend line and the high. We said pullbacks, and we said that this is a fantastic zone, well, at least for me, for short-term sells. Why? Because you have a cycle, because you have a level horizontal one, and because you have a divergence. So such opportunities look good, in my opinion, for short-term divergence trading. And it all, well, we know we're looking for buys now, right? But we need pullbacks before we attack the buys. So if it all fits together and you can enjoy that short-term for a few pips, why not trade it? I have no reasons against. So if you did enjoy it, well done. Then we had the false break, then we had the divergence, look perfect, and the continuation. Okay, so basically pullbacks and buys. Where to? Let me just remove all that now. That's the cycle, and the 38 to 50 zone, you can see, is already reached. As I said, this is now convergence, guys. Okay, so we still don't have two waves up on the daily chart. We have nothing. That means pullbacks and possible pushes to the upside are very, very possible idea here. And well, after such moves, you can't really expect the price to just stop, right? Unless we have V pattern, then that's a different story. But Dolar Franc, in my opinion, is still a fantastic opportunity for shorts and continuations. And that's about it. Do we have anything? Dolar Franc. There we go, Dolar Franc, this one. So that's basically the idea from earlier this week. That was actually the very, very bottom, guys. This place here on the 15-minute chart, right here. So basically we had the 1-hour chart divergence, 4-hour chart we said no, and 15-minute chart right here. Again, divergences. So basically big divergence here and the small one. And this is where the setup forms. Of course, this is something that we expect on the daily chart to complete the divergence as well, and it's the perfect duplication of the level down. So yes, aggressive, but this is still convergence idea, even though it is on the 15-minute chart. Combined with the other time frames, in my opinion, is aggressive but absolutely tradable. And the next confirmation for me is that this basically happened in one wave to the upside. It managed to clear one spike, second spike, third spike here, right? Highs. Valid or not valid highs, I don't care, but those are small, tiny corrections which we cleared in one shot. So obviously there is something going on here, at least in my opinion. And that's why, even though it's slightly aggressive, definitely worth the attempt. And as you can see, if it moves, it moves. Now this one, is it a good idea to buy here? Definitely yes. Okay, because now you can see that we have a flat move, and inside this flat move we're creating again false break with convergence idea. So this delta, not delta pattern, guys, was that Libra, is still amazing one. Let's see what else do we have. EuroCAD, not really tradable on my side. Euro Aussie, two scenarios, and this is of course for the mid short term, because later on we might be expecting further continuation, but in the short term we said that we're looking for sells, and those sells, the idea for them is right here. 4-hour chart, the hidden divergence, we reached the 100% level, and we said since the trend line is not reached, okay, even though that range was reached, we could still get this up and then continuation lower. That means trading this trend line breakout should be a bit more conservative. That means double confirmation to be applied. I know there are people who jumped in immediately after the breakout, and that's fine, guys. It's your trading style. I'm not judging. I'm not saying mine is better or yours is better, but it's just a preference on my side that if the level I'm following is not reached, I want to be a bit more conservative. So the idea here is breakout, attempt to create a false break, and then break below. I don't see a trend line here, and I'm not able to trade a trend line here, to be honest. Only the hidden divergence that formed was some sort of confirmation with the level. So if you find an idea here, perfect. But for me, again, that's the most correct way to go ahead and trade it. Well, the safest, not correct. Apologies. So this one, it creates a bit of fuss here with no direction, and then boom, we are getting the move down. So if you're in, well done. In my opinion, keep it at least towards the 160.50 zone. This is where the first target, in my opinion, should be taken, and then protection to stop loss, sorry, protection to break even, and then we probably are going to move lower. We have the alternative trend line, we have the 50%, which is lower again, and the green line right here. So providing something like this is definitely an opportunity. We can also follow up on this triple cycle here that is probably going to develop. So that's the idea about Euro Aussie, guys. Aussie CAD, I think we already covered. So I was looking for a sell here. After that, as it got stuck in the range, we said that it's better to lower the exposure. Then we got the spike to the upside, which means the sells here would fail, okay, even if it's with tiny exposure. If you closed it, well done, okay. So basically now we have something that reminds a triple cycle. That means pullbacks from this level, double waves, and possible continuation higher. Why? Because we might be getting a bigger double wave on the daily chart, okay. I wouldn't hold my breath about it, to be honest, because now we did reach the trend line, and this trend line is perfectly matching with the magnet zone. Daily chart, hidden bearish divergence as well, and that means there is a good chance we're simply going to continue lower. Okay, keep in mind, guys, that that's the only divergence we got. We never got divergence on the MAs, and we got hidden divergence, which means divergence against this one is now present. So one more low, clearing the previous swing, is absolutely valid. Just because we had a triple cycle doesn't mean we're going to continue. Okay, we need this before continuation. So as long as we didn't get that, bearish remains, in my opinion. Okay, at least in the short term. Then once, of course, if we reach the bottom, and that would be a simply fantastic zone for buys, we can expect this. Okay, so Aussie CAD, a bit tricky, but we must learn how to deal with those, right? Aussie Yen, after the breakout, we're expecting pullbacks and then continuations. Double wave is now completed, ignoring that spike, of course. The divergence is now in place, so the trend line is something like that. Where is my trend line? Here. Using this spike, and then we can see that we are inside some sort of corrective structure. Okay. Again, the divergence is here, so I'm expecting continuations higher. That would be the idea. Of course, daily chart also provided here the convergence that we were looking for. In that case, we do have the divergence, so everything looks good. The only thing that I wish we're going to see is deeper corrections, but it's very likely we're not going to see them because everything already is lining up for continuation. So Aussie Yen, bullish, bullish, bullish. Aussie Kiwi, yesterday we said that there is a very good chance we're going to see continuation lower as the price Aussie Yen, did I say? What did I say? Hold on, I see a comment. 1 second, guys. Would you wait for that spike to be cleared, or should we disregard because it was news related? In that case, I would disregard it. Just 1 second. In that case, I would disregard it when it comes to the double waves, because it was a new spike, and if you ignore it, you'll see that the price makes perfect sense. Okay, and if we include it, then this is your double wave, which you can of course also use. It's not a problem. The only issue, in my opinion, is, well, it is valid, but I don't know. Both correct, yeah. This one or that one. If you're looking though for horizontal breakouts, then I'm going to include it, absolutely, yeah. But for this one, not really. You're welcome. So Aussie Kiwi, my idea is still that we could be seeing this pair to develop this breakout to the downside. Why? Because we're having difficulties breaking that newly formed 1 hour chart range. Okay, so we have range, big one, and we have range that developed inside the range. So the next reason is the daily chart, not the daily chart, the daily trend line, which the pair is attempting to break and more or less managed to hold below here, right, for so long. Now there are divergences developing on 4 hour chart, on 1 hour chart, etc. And that means for daily chart, this is the high that must be broken, but we can't really say this is a divergence, right? It's just a flat move. So not really correct, guys. Spin it as you wish. Puts bullish pressure, but we can't really rely on that. On the other hand, Aussie Kiwi on the 4 hour chart makes a bit more sense in terms of divergences and double waves. So break above this one would create convergence. If that happens, we can expect the price to continue higher. Anyway, as long as this level is holding, I think we still have the chances of breaking lower. We also discussed the opportunity of this pattern being head and shoulders pattern with breakouts below here and coming to that level. And then we're talking about weekly, which once if this trend line is broken, and of course we're following the previous touch points, which so far we have high, low, high. That means having a new low here won't be a big surprise. And to be honest, I would love to see that. Why? Because first of all, we can enjoy this room to the downside. Second of all, I'm selling my current buying Aussie Kiwi. Joking, of course, but it is an amazing level. We have this before that, which is divergence with convergence, and in my opinion, this is wave number one, correction, and we're in front of the middle leg that should be providing something very, very big. Okay, of course, keep in mind we have that and this here. So this is the same idea, guys. This is the monthly level. 38 to 50 zone is approximately right here. So it all fits, but let's see which way is going to develop. It is an old one, I admit that. Okay, next one. Let's see, actually, do we have anything? Scorpio. FX Delta, Scorpio code, Aussie Kiwi. We got a buy here from the very, well, not very bottom, but from the bottom. Okay, and that thing was based on this 4 count, which is 1, 2, 3, 4, and then the price is switching to the upside, expecting for the price to continue higher, trading basically the ranges. That's the whole idea. That was the entry, guys. Once again, it couldn't close it, but in profits, I mean, it managed to close it here with the trailing stop, and that means we minimized the loss, which is simply fantastic. Ahmed, yes, we will, no problem. So that's Aussie Kiwi. Pound cut, there you go. Daily trend line, which as long as it is holding, we can expect the price to continue lower. Okay, we did get the divergence, hidden divergence here. Excuse me, guys. So that means possible continuation lower or a breakout. And on the 4-hour chart, we said that we developed a range. After this push lower, I was expecting, because we had the momentum for the price to create double waves and continue lower, this setup would fail. Okay, this is the setup I'm referring to. That's the 1-hour chart breakout. Can we go ahead and be aggressive with this breakout? In my opinion, yes. Why? Because we had the attempt of the range breakout. We had the divergence. We have the overall trend being bearish, and we're pretty close to the next level. That is right here. So being aggressive in that case, in my opinion, is perfectly fine. Even though, yes, it did fail, we managed to reach again the top of the range, which is why basically the trade failed. So as we can see, guys, basically it is still inside the horizontal range. So that's what we need to keep on following. Okay. Ahmed, does that cover pound cut for you? All clear? Basically breakouts, if we get a valid breakout, and we had an attempt to do so here again, which is failing in my opinion. So we need to see definite breakouts above these highs or lows, and then pullbacks and continuations. Perfect. All right. Euro Kiwi, pound franc. Well, Euro Kiwi not very interesting this week. We got the bounce from this trend line, and we're basically trading both directions now. Okay, following that zone for a possible break to the downside, which might be providing further continuation lower. Keep in mind the daily chart already formed false convergence, okay, and strong pushes to the downside are very possible. On the other hand, we already developed bullish hidden divergence, and that means continuation higher. So we really need to see how the pair is going to react from that zone in order to decide whether we have further continuation up or down in the longer run. And in the shorter run, this is well, basically what we have, right? So bounces and sells, or breakouts and buys. But again, not the most interesting one. Pound franc, we do remain bullish here. Okay, after these V patterns that were created, obviously for some reason clearing stops, it looks not bad again. So basically the idea was this trend line to be broken, okay, and then for continuation higher. We also had the head and shoulders idea for the target of the daily, etc., etc. What happened is we got the divergence, we got the breakout, creating convergence, bouncing from this trend line, and then boom, V pattern. Welcome. And now we have a breakout, which I do believe is again a reason for a possible continuation. Okay, why? Because we broke again above this level. We had the first attempt to break the trend line right here, and basically we're holding the price above it. Okay, so assuming that this is a neckline, assuming that this is a trend line breakout on the higher time frames, the price is rejecting to go below. Is that my favorite pair to trade? No, not really. I can't say I'm crazy about it, but again, the idea is for a possible continuation higher. So pound franc remains bullish and now starting to give again confirmations that this bullishness could be continuing. Kiwi, divergence, push, break of the trend line, never managed to broke above, hidden divergence created. We said that we're expecting continuations higher. That was one fantastic opportunity for the short run, okay, with those spikes to the upside providing some good moves. And now we developed a bigger double wave, in my opinion. Trend line breakout is more or less holding, and there is now hidden divergence. Which low is that? This one. Hidden divergence that from this place started to turn into continuing divergence. So the trend line in this case for buys is not ideal. It's super far away. That means we need to find alternatives for possible bullish entries, right? Divergence from the 1 hour chart inside the second leg. Ugly, agree, it is stuck inside 2 candles rule, but all we need to confirm with the divergence is that this moves, because we do have moves here. It's not a flat move, okay? For me, that's a move. Stuck in 2 candles with this spike or not, I don't care. It is a move because when I look back, the whole leg here developed in the familiar, similar way, right? With this tiny pullback. So 1 hour chart might not be the best one for this kind of analysis, which means I might drop to the lower time frames. So what do we have? This is our 1 hour chart divergence, and that's the spike that we need to see broken up before we can confirm divergence convergence or triple or special cycle for continuation. Kiwi Dollar, the way it appears at the moment, remains bullish in my opinion. Okay, how do we deal with 2 trend lines? You have one trend line breakout and you have second trend line breakout. Well, you go with the higher time frames. And here we have delta pattern, here we have hidden divergence with continuing divergence. So this one is bullish, divergences are bullish, this trend line breakout is bullish, everything is bullish. Okay, so that's basically the idea. Only the daily chart is saying bearish with this hidden divergence, and that's why I would be looking not for trend line breakouts here. I would be looking, even if it's on the 15-minute chart, I don't care, but for something more conservative and reliable. And now that we have reached the level, that's simply perfect. Let's see how it's going to develop. One possible issue that I see on the contrary here would be the 100% zone. So basically break above on the 15-minute chart, and that goes exactly below the 100% level. So bounces could be creating new lows, new false breaks, 161.8 to be reached, and only then possible continuation, of course, unless we drop. But we're referring here to the bullish scenarios. So if you're going to trade this bullish opportunity here, in my opinion, it should be done with minimum risk. That's your risk reward ratio towards the top, and we can't complain. If it breaks below and it continues lower or creates another false break, it's again fine. Why? Because then we have the 160.8, then we have these levels here, right, that we can draw later on, and then the attack could be with bigger lots, and then you make even more money. Is the difference here clear, guys? Why we should be using less risk? We have a level above, okay, and that level could make one more false break. Okay, perfect. That's the Kiwi and Kiwi Dollar. Let's see, what do we have? Triple B. Kiwi Dollar, this one pushes to the downside. Okay, attacking. Is that a good attack also? Yeah. If you missed, no problem. Go ahead and rejoin a bit later. Okay, and then we had the move. What's the problem with this setup, guys? Can anyone tell me here? What makes it aggressive? Everyone is puzzled. Okay, I'll give you a hint. 4-hour chart, 20 MA. Okay, the price just moved above it, and it didn't give it a chance to yet reverse and change the angle. Yes, the price is above it. That's why we do have green rectangles now and not red. And this is where the breakout of 20 MA happened on this move. But usually we want to see the price and the 20 MA reversing before we start attacking. So this is a bit more aggressive approach here, okay? But it totally makes sense. And besides that, you know, it's a scalp. So, and this is the daily chart, sorry, not the 4-hour chart, my bad. But it did work, so that's the most important part. Quick scalp, which we cannot complain about, right? Then we have CAD yen, which in my live rooms, I believe we didn't really discuss. The only thing we had here was levels, and this is the top right here, and the divergence. So basically, double wave, divergence, this previous move up, expecting pullbacks. Those pullbacks delivered exactly towards the magnet zone. That magnet zone is coming together with hidden bullish divergence. So if you traded this one, very well done. Regarding the weekly, in my opinion, this is what we have. triple plus double plus trend line breakout, move to the downside, okay, and this move down, in my opinion, is now inside some sort of double wave here, which means sooner or later I would like to see break below and continuation. Okay, that's about CAD yen. Euro pound. Did we discuss euro pound? No, we didn't. Euro pound, the idea was that we have a potential second leg to be developed to the upside, which never actually happened. Those are the top swings and highs, and that trend line was never broken. If you're trading on the lower time frames with these spikes, I'm not sure if you had a breakout or not, but you know that overall the momentum is down, guys. So this short-term bullish momentum might happen, might not happen. Okay. Bottom line is we're looking for sells. That's the idea. Why do we look for sells? Because of this cycle, which, by the way, never gave us the correction, not the correction, the divergence. But we got breaks below, we got break below the trend line, and that could be very likely now, if we break below without it, without creating double waves, the retest of that trend line and the continuation lower. So euro pound becomes a bit ugly in terms of reading it, at least for my eyes. Bad boy not behaving the way I would like to see it behaving, but we're gonna find a way to again trade it. I'm talking about manual trading. Of course, coming to the softwares, we just wait for a signal based on the direction and then we continue. Pound yen, similar story as with the other pounds. We were looking for trend line breakouts and then continuation lower. Daily trend line breakout, which means if we get double wave towards this zone and then push higher, that would be simply fantastic. Euro yen, that's the daily chart. So basically double wave, we had another double wave here on the lower time frames, and we said that we want to see this spike together with these zones being reached, and once the levels are cleared, we want to look for the sales. We never got the move up that we were expecting, and after the false breaks, price is now managing to close below. Is that going to be the beginning of the sell? Could be, potentially, but I still expect that we're going to push one more time higher. Why? Because we're developing here bullish hidden divergence, okay? And this trend line is still holding. Basically, everything is still holding, and besides trading, where is the divergence? Do we have divergence? Triple B? No, we don't. 1 second, guys. Besides trading divergences and attacking the levels, the long-term reversal is still not there. Okay, so this is what I call one leg divergence, guys. We have a double top. MAs are agreeing. We have 2 or 3 doji candles, which means the momentum is missing, and statistically we have good chance of the price pushing lower. You can see that the risk reward makes a lot of sense. The target is before the previous low, and this is perfect situation, because if you enter the sell here, for example, then the 1-to-2 risk reward ratio will come a bit below, and that means possible problems for us. So Euro Yen did deliver here fantastic sell. We had another sell opportunity, by the way, on the Dollar Yen. Now this is the pattern that we've been following the entire week, multiple divergences, multiple false breaks, etc. And we said that we want to see the price pushing lower to the downside. Unfortunately, even that the target was very, very close. Okay, for some reason it was not reached, just missing a few pips. And then the idea of clearing the actual level actually happened, which could be actually, in my opinion, possible continuation here, but this is a different subject, guys. Oil still waiting for this one more push higher and then possible continuation to the downside. Vivendi still stuck, no breakouts. Adidas still playing inside this range, so nothing about this one. And then that pair that we said, either break above or continuation lower for something like this. So far it's pushing lower, so let's see if we can break below that zone, which was the last divergence, and possibly continue to the downside. And Deutsche Post is also one interesting opportunity. Now this is a bit longer term, but basically that would be my idea. Monthly cycle, looking for another push lower. This is the daily cycle, sorry, weekly, and this is the daily. So looking for breakouts, pushes down, and then continuation higher. And that basically covers it all. Do you have any questions, guys? Perfecto. Very welcome. Glad it's helpful. All right, guys. So have a fantastic weekend. Recover the energies. We probably have a fantastic week ahead. Thank you, Catherine. You're welcome, guys. Bye for now.